What's going on, guys? You can hear me now? Do let me know, please. God bless you all. Thought I heard you for a sec. Yeah, no worries, bro. You're going to hear me now. Yes, everyone. Wagwan, what's going on? Let's pray for Jamaica. Let's pray for our portfolios. Welcome to the channel. Hope you're all doing well. Caveman, get yourself ready. Moon Bear Crypto in the building. No, who else is here? Pratik is here as always. This is looking bullish. Well, let's hope so. This is absolutely going to go down to the wire. This is insane. Guys, I can't wait for this phase of the market to be over. However, we got to get through Jerome. And let me just remove myself for a minute. Guys, do let me know. Can you also hear? Can you hear the screen? Can you hear the screen share? If you hear the screen, do let me know, because that's going to be pretty. What is up, brother? I hope you're well. No, just me. Okay, perfect. Okay, let's see how we are going to share this mad screen. Audio. Hey, yo. Why is the audio? We'll figure this out. Perfect. Let's try and get this. Oh my days, the big Yeti's in the building. Absolute legend. What's going on, brother? Hope you're doing well. Hope the family is well. Hope no screen sound. I'm going to work on that. But yeah, big up yourself, bro. Love to talk to you later on. All the families in the building. I'll get to all of you guys. In the meantime, we've got an audio problem. Let's go with this. Get rid of this. Audio problems. Let's go. Let's fucking go, man. I've had enough of this cycle's run. Honestly, I'm so tired. Like, I just want this phase to be over, man. Let's go share this screen. Boom. Audio check. Screen share. Window. Do you hear the audio now, guys? Yo, James O'Brien in the building, aka Big Jimmy. No, brother, without you and the rest of the legends, without you, without Patriot, without Muzzy, without Clev, there's so many, so many of you to name out there, man. But let me know if you hear no audio on screen. Only me. What's going on with the audio on the layouts? Okay. We've got to have audio on the screen. We've got to have audio on the screen. Without audio, still only hear you and not the audio. Okay, cool. I'm going to go dark for a minute, guys. Do bear with me for a second. Let's go get this thing going, man. This is going to be huge, guys. This is going to be huge. End of QT. Holy, am I hearing this right? Am I absolutely hearing this right, man? This is absolutely insane. Like, what a great time to be alive. I want to kick myself straight away, but this is the time to be in crypto right now. We need to get excited at something, man. This is it. I can feel it, honestly. I never thought I'd be as bullish as I am today. regardless of what happens, end of QT is massive. Let's see.
Is going to work.
End of
Look, I think these are all quite small moves. 25 basis point rate cut was already priced in, so it's already kind of reflected in broad financial conditions. But I think it'll help to continue to support equity valuations that are high, credit spreads that are tighter. It'll filter through into lower front-end interest rates, so help on credit cards and auto loans eventually over time. We'll have to see what happens with mortgage rates as the chart shows there. Actually, 10-year yields are moving up on this decision, not down, and therefore it may not help on the mortgage rate side of things. But I think it's more so not necessarily the decision today, but what is the Fed going to be doing over the next 3 to 6 months, next 6 to 12 months, and how much are they going to be cutting rates over that period of time? That's what really is going to impact financial conditions.
I'm curious, Matt, if the chairman brings up productivity here. The smartest thing I've heard in the last hour as we've done this is from Bob Michael, where he said of his new palace at JP Morgan, AI is everywhere. How is the moment changing? I guess, how is the guess that you have of this moment of AI, how is it changing your view, your overlay of productivity?
Yeah, I think the productivity story is really the critical question for the Fed at the moment. And we heard this from Governor Waller in his comments before the blackout period. And it's really because we have this huge divergence between real GDP growth that is very strong, almost 4% in Q2, Atlanta Fed is tracking almost 4% in Q3, but a labor market that's weakening kind of meaningfully at the margins. And that is being explained by strong productivity gains. My own view is that, yes, some of this is due to AI, but it's mostly reflecting a very tight labor market that we had in previous years, which motivated businesses to undertake CapEx and capital deepening and find efficiency gains. Many of the productivity gains I think that we are going to see are actually further in the future. But this stronger productivity story for the Fed, I think, is one which suggests that rates most likely should stay higher over a longer period of time, and that our star is eventually going to be higher as well.
Michael Ferroli will write on this on Friday. You have to think about it in real time as seen in yield. A given company, we're showing 30,000 a door. Another company, we're showing 14,000 a door, and on and on and on. How do you, with all your experience, treat 5-figure job reductions at America's finest companies?
Yeah, you accept that it's the economic reality. You accept that we're in the very early stages. You hope that new industries and businesses will be created off of the back of AI that will employ more workers, and there will be a greater efficiency. We saw that when the electronic spreadsheet replaced manual spreadsheets. We saw that in the dot-com era. Hopefully we'll see it with AI.
And Robert Kaplan, the former Dallas Fed president, was just wonderful on this the other day.
What did he say?
He said hope. He said just what Bob Michael said. It's one big academic hope by the haves that there's a good side on the other side of AI.
Luke Cower, I think, has been absolutely brilliant on this. This is regressive up front. Can hold back employment. In the near term, I hope that changes. It can boost energy prices. Electricity in this country is becoming the political topic.
Agreed.
For the next 18 months.
Agreed.
Now, the argument you've got to make is that's all going to change. Productivity picks up. Great. Fantastic. But in the here and now, isn't that a bit of a stagflationary story? If you strip out what is happening, say, with energy prices, electricity taking off, if you look at what's happening with labour market, holding back employment, isn't that a bit of a problem for this committee?
I don't think so. I think that they're comfortable looking through inflation, and if there is a problem in
no doubt, they've done that for 5 years.
But if there's a problem in the labor market, that in and of itself will hold back some inflation.
We have 25,000 employees. You are the most qualified one I know to talk about electric bills. What does America face if we have some semblance of the electric bills of Britain?
I know, Mum. Don't worry. I'll take care of it at the end of the month. It goes something like that.
That's how it goes.
Yes, it does.
Okay, that's real, folks.
The energy prices in the UK are absolutely brutal. They're absolutely brutal. And if you face anything like that in the United States, you're talking about the wealth inequality in this country right now. We're lucky to have the energy prices we have because they're so much lower compared to some other individuals, some other nations in the G7. If they face that same situation here in the United States, imagine the midterms 18 months from now. Imagine the local politics and the support for those data centers. What's that going to look like? You tell me.
Governor of Virginia on 14% lift in energy costs.
You're going to want that data center? How many people they're hiring?
Yeah.
I know what it's doing to electricity prices. How many people they're hiring? Not many. It's pretty Labour light. Matt Lazzetti at Deutsche Bank. Matt, thank you, sir. Always good to hear from you. Matt Lazzetti there of Deutsche Bank, breaking things down, called correctly the end of QT. That's exactly what we got about 27 minutes ago. Bob Michael, you're fantastic at this. Going into the news conference, questions for Chairman Powell. What would you like Mike McKee to ask in a moment?
I think he's got to press them on what are they seeing from their own sources of data? What are they seeing from the regional banks and their thousands of economists? They're talking to businesses every day. They didn't make this decision blind, much as it creates a wonderful narrative for the three of us. They reacted to something. What was that?
What do you think the next decision hinges on? What are the metrics? If we don't have the data, let's say the government's still shut down, what's the next decision hinge on?
I think it's going to be anecdotal evidence from businesses. If they're still in a pause, hire, and fire doing neither, then this Fed will respond by cutting rates 25 basis points.
What is your shop's 12-month call on 10-year yield? We're now, I'm going to say a 399, 398. John's in charge of that. I just look at the Dow Jones Industrial Average. John looks at all the rest of the data. But on the 10-year yield at a 399, what's your call 12 months out?
Well, let's start with Fed funds. We see that around 3 3/8%. I think you're going to see the 10-year somewhere around 3 3/4%.
Okay.
Bob Michael, JP Morgan, this was fun. It's good to see you.
Always a pleasure.
Thanks for dropping by.
Great.
We've said a few times on this program over the last few meetings that these meetings are going to get harder and harder for this Federal Reserve. At the next meeting, when Chairman Powell convenes things, think about things. Today, the good news, no forecasts. Imagine how difficult it would be to provide forecasts in a moment like this. At the next meeting, can't escape it. This committee will have to put together forecasts for 2026 with the potential of not having any data at all. And even if they have the data, that data could be very, very messy. On top of that, Tom, we might have that shared decision from this administration, which will take away the ability to guide into 2026 anyway.
On this Wednesday, all this talk here as we go to this conversation, the questions and the answers, we have to remember that in, an hour and a half, these mega companies are going to show profit and cash flow that is not in any of our textbooks.
This is why, Tom, so many people right now are so bullish. What matters to the equity market? Not payrolls. I've said a few times, if I told you the payrolls data at the start of this year, at the start of 2025, you would have been hopelessly bearish on this market.
Correct.
What's mattered to equities has been earnings. What's mattered to the man that's about to step into that room is the step down in payrolls. So the market gets the best of both worlds, gets the earnings one and gets the interest rates reduction as well, two. And the man who's about to step into the room is going to deliver potentially another 25 basis point cut at the end of the year. That's the reason why so many people right now have been bullish this equity market. Equities into this news conference at all-time highs on the S&P 500 up by 0.2%. The FOMC divided, voting to cut interest rates by 25 basis points. Here's the chairman of the Federal Reserve.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today, the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year. A good part of the slowing likely reflects a decline in the growth of the labor force, due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index suggest that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3 3/4 to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks. In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course. At today's meeting, the committee also decided to conclude the reduction of our aggregate securities holdings as of December 1. Our long-stated plan has been to stop balance sheet runoff when reserves are somewhat above the level we judge consistent with ample reserve conditions. Signs have clearly emerged that we have reached that standard. In money markets, repo rates have moved up relative to our administered rates, and we have seen more notable pressures on selected dates, along with more use of our standing repo facility. In addition, the effective federal funds rate has begun to move up relative to the rate of interest on reserve balances. These developments are what we expected to see as the size of our balance sheet declined and warrant today's decision to cease runoff. Over the 3.5 years that we've been shrinking our balance sheet, our securities holdings have declined by $2.2 trillion. As a share of nominal GDP, our balance sheet has fallen from 35% to about 21%. In December, we'll enter the next phase of our normalization plans by holding the size of our balance sheet steady for a time, while reserve balances continue to move gradually lower as other non-reserve liabilities, such as currency, keep growing. We will continue to allow agency securities to run off our balance sheet and will reinvest the proceeds from those securities in Treasury bills, furthering progress toward a portfolio consisting primarily of Treasury securities This reinvestment strategy will also help move the weighted average maturity of our portfolio closer to that of the outstanding stock of Treasury securities, thus furthering the normalization of the composition of our balance sheet. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting our maximum employment, bringing our inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Nick Timmeros of the Wall Street Journal. Chair Powell, are you uncomfortable with how market pricing has assumed a rate cut is a foregone conclusion at your next meeting?
Well, as I just mentioned, a further reduction in the policy rate at the December meeting is not a foregone conclusion, as I've just said. So I would say that needs to be taken on board. We had, I would just say this, 19 participants on the committee. Everyone works very hard at this and takes their obligations to serve the American people very seriously. And at a time when we have tension between our 2 goals, we have, strong views across the committee. And as I mentioned, there were strongly differing views today. And the takeaway from that is that we haven't made a decision about December. And, we're going to be looking at the data that we have, how that affects the outlook and the balance of risks. And I'll just say that.
You and some of your colleagues have framed last month and maybe today, I won't put words in your mouth, there's a risk management exercise. At what point do you conclude that you've taken out enough insurance? Are you looking for some kind of improvement in the outlook? Or could this unfold along the lines of last year, where you made a sequence of adjustments and waited to gather more information?
So the way I've been thinking about it is the risks to the 2 goals. For a very long time, the risk was clearly of higher inflation. And then that has changed now. And as we saw particularly after the July meeting, we saw the downward revisions in job creation, we saw a very different picture of the labor market and suggested that there were higher downside risks to the labor market than we had thought. And that suggested that policy, which we had been holding at a I would say modestly, people would say moderately restrictive level, needed to move more in the direction over time of neutral. If the 2 goals are sort of equally at risk, then you ought to be at neutral because one of them's calling for you to hike and one of them's calling for you to cut. So if that got back into balance, then you'd want to be roughly at neutral. So in that sense, it was a risk management. And I would say the same about today, sort of the same logic. But as I mentioned, going forward is a different thing.
Claire.
Claire Jones, Financial Times. Thank you for taking this question. We've just heard from you that the discussion in December and the conclusion of the discussion is not a foregone conclusion. I'd like to just dig into that a little bit more about what sort of arguments were brought up. Was there any consideration, for instance, of the investments we're seeing in AI and some of the generation of household wealth rises in stock prices related to
but that's
the AI
okay.
boom?
We're not looking for.
I wouldn't say that's a factor in everyone's assessment of the economy. I wouldn't say it's the driving factor. I don't think for anybody.
So
I guess I would say it this way. Once again, I would just point out that we have the situation where the risks are to the upside for inflation and to the downside for employment. We have one tool. It can't do both of those. You can't address both of those at once. You've got a very different situation. So you have some people have different forecasts, right? So they'll forecast faster or slower progress on one or the other. And they also have different levels of risk aversion. And some will be more averse to inflation overruns and some will be more averse to underruns of employment. And so you put that together, and as you can see from the SEP and from the public discussion that goes on between the meetings when more participants go out and talk, there are very disparate views, and they were reflected in strongly differing views in today's meeting, as I pointed out in my remarks. And that's what leads me to say that, that we haven't made a decision about December. I always say that. It's a fact that we don't make decisions in advance. But I'm saying something in addition here, is that it's not to be seen as a foregone conclusion. In fact, far from it.
Can I just ask a quick follow-up on QT? How much of the fund impressions we've seen in money markets are related to the U.S. Treasury issuing more short-term debt?
That could be one of the factors, but the reality is we've seen, the things that we've seen, higher repo rates and federal funds rate moving up. These are the very things that we look for. We actually have a framework for looking at, what the place we're trying to reach. What we said for a long time now is that when we feel like we're a bit above what we consider a level that's ample, that we would freeze the size of the balance sheet. Of course, reserves will continue to decline from that point forward as non-reserve liabilities grow. So this happened. Some things have been happening for some time now, showing a gradual tightening in money market conditions. Really, in the last, call it 3 weeks or so, you've seen more significant tightening, and I think a clear assessment that we're at that place. The other thing is, the balance sheet is shrinking at a very, very slow pace now. We've reduced it by half twice, and so there's not a lot of benefit to be holding on to get the last few.
Let's see if I can share the whole window. Yeah, that's better.
The New York Times. So much of the rationale for cutting interest rates, even as inflation moves away from the 2% target, seems to be, that there are these mounting downside risks to the labor market. But if those don't materialize and the labor effects from tariffs?
Yeah, in principle, if you were to see data that suggested that the labor market's strengthening or even that it's stabilizing, that would certainly play into our decisions going forward. So, we do have, we get some data. The labor market is a place where we get, for example, we get the state level data on initial claims, which are sending a sort of a signal of more of the same. We also get job openings. And we'll get lots of survey data. We'll get the beige book and things like that. So we'll have a picture of what's going on in the labor market, and the fact that we're not seeing an uptick in claims or a downtick really in openings suggests that you're seeing maybe continued very gradual cooling, but nothing more than that. So that does give you some comfort.
But if this shutdown lasts a while longer and you don't have that data in hand, I'm just wondering how that hinders the committee's ability to assess the state of the labor market and make the right policy decisions, and also how much is that factoring into the debate about December?
Yeah. So we get. Like I mentioned, what we get in the labor area, we get some data in inflation, some data in economic activity, and we'll have a picture of what's going on. We also will have the beige book again. I would say we're not going to be able to have the detailed feel of things, but I think if there were a significant or material change in the economy one way or another, I think we'd pick that up through this. So in terms of how it might affect December, it's really hard to say. December's, the meeting's like 6 weeks away. We just don't know what we're going to get. If there is a very high level of uncertainty, then that could be an argument in favor of caution about moving. But we'll have to see how it unfolds.
Well, 5 minute longs piling in, 1 hour long, 65%.
Mr. Chairman, can you characterize the meeting in terms of, you said strongly
people have
differing views.
Absolutely.
Was this a close call, this cut, or was it a close call maybe the other way, because you had dissents on both sides?
What is the direction?
So I was referring to the discussion about,
long.
to the extent it related to December. You saw we had
And
2
short
dissents,
term as well.
one for
You know,
50 and one
medium
for no
short term,
cut. So,
I'll
that
be
was a
very
strong,
careful with
solid
this,
vote in favor of this
because
cut.
we still have
The strongly differing views were really about the future. What does that look
fear
like?
and greed index.
And I think
staying at
people
a
are saying,
funny level as well.
they're noticing stronger economic activity. Forecasters generally, broadly, have raised their economic growth forecasts for this year and next year, in some cases quite materially. In the meantime, we see, a labor market that's kind of, I don't want to say stable, but it's not clearly in motion. It's not clearly declining quickly in any case. It may be just continuing to gradually cool. And again, people have different forecasts and expectations about the economy and different risk tolerances. And so there's you read the SEP, you read the speeches, there are differing views on the committee, and to the point where I said what I said.
And just to follow up on the balance sheet, if you stop it, the runoff now, does that mean you have to go back to actually adding assets sometime next year so that the balance sheet doesn't shrink as a percent of GDP and become a tightening factor?
So you're right. The place we'll be on December 1 is that the size of the balance sheet is frozen. And as mortgage-backed securities mature, we'll reinvest those in Treasury bills, which will foster both a more Treasury balance sheet and also a shorter duration. So that's what, in the meantime, if you freeze the size of the balance sheet, the non-reserve liabilities, currency, for example, they're going to continue to grow organically. And because the size of the balance sheet is frozen, you have further shrinkage in reserves. And reserves is the thing that we're managing that has to be ample. So that'll happen for a time, but not a tremendously long time. We don't know exactly how long. But at a certain point, you'll want to start reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we'll be adding reserves at a certain point. And that's the last point. Even then, we'll be. We didn't make decisions about this today, but we did talk today about the composition of the balance sheet. And there's a desire that the balance sheet be. Right now, it's got a lot more duration than the outstanding universe of Treasury securities, and we want to move to a place where we're closer to that duration. That'll take some time. We haven't made a decision about the ultimate endpoint. But we all agree that we want to move more in the direction of a balance sheet that more closely reflects the outstanding treasuries, and that means a shorter duration balance sheet. Now, this is something that's going to take a long time and move very, very gradually. I don't think you'll notice it in market conditions, but that's the direction of things.
Some of the altcoins see here, about 250. These are wild prices.
How are officials interpreting the latest CPI report? So some components came in lower than expected, but core inflation was still at 3%. So at this moment, what are you learning about the drivers? And also, do you view that the risks are greater that the Fed makes a mistake on employment or inflation?
So the September CPI report, we didn't get PPI after that, which is important for translation into what we look at, which is PCE inflation, but we can still make a pretty good assessment of what that will be. When we get PPI, there might be some adjustments, but so directionally, it was a little softer than expected, and we always break it down into the three components. So basically, you've seen goods prices increasing, and that's really due to tariffs, and that's compared to a longer run trend of very, very mild deflation in goods. So that's moving inflation up. On the other side of that, good news that housing services inflation has been coming down and is expected to continue to come down. So if you remember a couple of years ago, that's the one that we kept expecting it to do that. Now it's been doing that for some time, and we'll expect to continue that. That leaves the biggest category is services other than housing services. And that's kind of been moving sideways over the last few months, but a significant part of that is non-market services. And we don't take a lot of signal about the tightness of the economy from that. So if you add all that up, a couple things to say. One is that inflation away from tariffs is actually not so far from our 2% goal. We estimate, people have different estimates of what that is, but it might be, 5 or 6 tenths. And so that, if it's 2.8, then core PCE, not including tariffs, might be 2.3 or 2.4 in that range, something like that. So that's not so far from your goal. So that we look at that, and the thing about tariff inflation is the base case is that it will come, and it probably will increase further, but it is that it will be a one-time increase. And we've been very focused for all of this year at making sure that that's the case, and thinking carefully about what are the pathways through which it could become something else, troublesome inflation. One of those would be a really tight labor market. We don't see that. Another could be inflation expectations moving. We don't see that. So I think we're watching this very carefully. I think it's not the case that we're just assuming that it's going to be a one-time inflation. We understand fully that this is a risk we have to monitor and ultimately manage.
With the stubborn in services inflation, what are some of the things that the Fed could do to address that, and especially when we're seeing potentially labor supply challenges?
Sorry, say the first.
The stubborn services inflation that you mentioned.
Service inflation, yeah. Well, again, the part of services inflation that isn't coming down as we would like it to is the non-market part of non-housing services. And overall, that's just something that we expect will come down. The non-market part of it should come down. It largely reflects higher stock prices and financial services that are imputed rather than actually paid is a big part of that. But also just, we think policy is still modestly restrictive in my telling. So that's the kind of thing that should lead to a gradually cooling economy. That's one of the reasons you see a gradually cooling labor market is because, the Fed policy is modestly restrictive. So that should also help get that. I want to say, though, we're absolutely committed to returning inflation to 2%. If you look at longer-term surveys or market pricing, you will see that's a credible commitment, and there should be no question that that's where we're going.
Chris.
Great, thank you. Chris Rugaber at Associated Press. So there's a big investment boom in AI infrastructure right now, as you know, and wondering if the existence of such a boom would indicate that rates are not that restrictive after all, and could further rate cuts at this point perhaps fuel an excess level of investment there or market bubbles? How is the Fed thinking about that?
So I don't think that you're right. There are a lot of data centers being built and other investments being made around the country and around the world. Big U.S. companies are just investing a lot of resources in thinking about how AI, which will be based on those data centers, run through those data centers, is going to affect their businesses. So it's a big deal. I don't think that the spending that happens to build data centers all over the country is especially interest sensitive. It's based on longer run assessments that this is an area where there's going to be a lot of investment and that's going to drive higher productivity and that sorts of things. I don't know how those investments will work out, but I don't think they're particularly interest sensitive compared to some of the other sectors.
And then just a quick follow-up. You mentioned that you do have data that you're looking at for inflation and growth in the absence of government data. Could you give us a sense? I think we know a lot about the jobs data that's out there. Can you give us a sense of what you're looking at to track inflation in the absence of government data? Thank you.
So it's a lot of things, and it doesn't replace government data, but you know all of these. I'll just mention some of the many names: Price Stats, Adobe, and others. For wage inflation, there's ADP data. On spending, you're going to ask about spending at some point. There are lots of other things that we look at, but it's many different sources, and again, including what we get out of the Beige Book, which will be sort of come out mid-cycle as always. And it doesn't replace the government data, but it gives us a picture. Again, I think if something material were happening, if there were material developments, I think we would pick that up. I don't think we'll be able to have the very granular understanding of the economy while this data is not available.
Having got open interest. W formation.
Howard Schneider with our Reuters. Thank you.
Come
I
on,
just wanted you
let's
to elaborate a
go.
little bit
This
on
is
what you
just
said a
open
moment
interest,
ago
guys.
about the continued shutdown, making it more difficult to make a move in December, and that may make you more cautious. To the degree you are relying on private data that isn't the gold standard, or that you're relying on your own surveys of the beige book, do you worry at some point you're going to have to start making policy by anecdote?
You know, this is a temporary state of affairs, and you know, we're going to do our jobs. We're going to collect every scrap of data we can find, evaluate it, and think carefully about it, and that's our jobs. That's what we're going to do. If you ask me, could it affect the you know, the December meeting? I'm not saying it's going to, but yeah, you could imagine that you know, what do you do if you're driving in the fog? You slow down. So that could or could not. I don't know how that's going to play into things. We may get the data may come back, but there's a possibility that it would make sense to be more cautious about moving. I'm not committing to that. I'm just saying it's certainly a possibility that you would say we really can't see, so let's slow down.
As a follow-up in the debate on this meeting, we saw recently some pretty big layoff announcements coming from Amazon and others. Wondering if that figured into the discussion at all, that you're starting to see this tension between growth and employment starting to be resolved, you know, to the detriment of employment. And secondly, some of the stress is starting to appear in the bottom spur of the K, as they call it, household health premiums that are going to possibly be going up quite substantially, things like that. Has that started to become a factor in your policy discussion?
So those are both things you know, that we're watching very, very carefully. To start with the layoffs, you're right. You see a significant number of companies either announcing that they are not going to be doing much hiring or actually doing layoffs, and much of the time they're talking about AI and what it can do. So we're watching that very carefully. And you know, yes, it could absolutely have implications for job creation. We don't really see it in the initial claims data yet. Now, it's not a surprise that we don't. It takes some time for it to get in there, but we're watching that really carefully. But again, don't see it yet in the initial claims data. On the K-shaped economy thing, I would say the same thing or similar thing. We are. If you listen to the earnings calls or the reports of, you know, big public consumer-facing companies, many of them are saying that there's a bifurcated economy there, and that consumers at the lower end are struggling and buying less and shifting to lower-cost products, but that at the top, people are spending at the higher income and wealth, and so much anecdotal data on that, and so we think there's something there.
Edward.
Thank you, Edward Lawrence with Fox Business. So, Mr. Chairman, I want to take another crack at the further reduction in rates is not a foregone conclusion. So in December, he said, far from it. So if a cut might not be on the table for December because of lack of data, what does the other concerns then stem from? So if it's not lack of data as the reason December is not a foregone conclusion, what other things could be the concern then? Well, the perspective is of people on the committee that, you know, we've now moved 150 basis points, and that we're down into you know, you're into that range between 3 and 4, where many estimates of the neutral rate live in that 3 to 4% area. You're there now. You're above the median number for the committee, but I think there are people on the committee who have higher estimates of the neutral rate, and that's you know, you can argue these positions since it can't be directly observed, the neutral rate. So, you know, I think for some part of the committee, you know, it's time to maybe take a step back and see whether there really are downside risks to the labor market, or see whether in fact the growth that the stronger growth that we're seeing is real. Ordinarily, the labor market is a better indicator of the momentum of the economy than the spending data. That's the lore. In this case, that gives a more downbeat read.
So people just have, again, we've cut 50 more basis points in the last 2 meetings, and there was a sense like, from some, let's pause here, kind of thing, and a sense from others wanting to go ahead. But that's why I say differing views, strongly differing views.
And so on that division, then you're talking about going forward. So what's more important in this division? Is it inflation risks? Is it employment risk? Or is there a deeper philosophy division among the board?
Look, everybody on the committee is deeply committed to doing the right thing to achieve our goals, maximum employment and stable prices. You have differences on how to do that. And as I mentioned, some of that is different forecasts, but a lot of it is also different risk aversions to the different different variables, which is common through all Federal Reserves. People just have different risk tolerances, let's say. So that leads you to people with disparate views. You will know that from the speeches you've been listening to from my colleagues. And so we're at a place now where we have, in fact, cut 2 more times. And we're 150 basis points closer to neutral, wherever that may be, than we were a year ago. And so there's a growing chorus now of feeling like maybe this is where we should at least wait a cycle, something like that. That's what it is. It's just what you think it would be. It's and again, you've seen it in the September Summer of Economic Projections. You've seen this in the public remarks of FOMC participants, and now I'm telling you that's what you can expect that in the minutes. And I'm just telling you that's what happened in the meeting.
Elizabeth. Thank you so much. Elizabeth Schulze with ABC News. What is your explanation for why the job market is weakening right now, and what will this rate cut do to improve the job market?
So I think there are 2 things affecting the job market, and one of them is just a dramatic reduction in the supply of new workers. And that's 2 things. That's declining labor force participation, which is a cyclical thing, and then there's declining immigration, which is just a big policy change that actually began in the last administration and it has been accelerated now. So a big part of the whole story is that supply side story. Okay. In addition, labor demand has declined, and the unemployment rate has gone down, meaning that demand for workers has gone down a little more than supply. So that's what's going on. But it is mostly a supply function. It's mostly a function of the change in supply, I think, and many people think. So the question then is, what does the our tool do, which supports demand? And and I would just say, when you're in a situation where job creation, if you adjust for likely overcounting in the way that BLS does its work, is pretty close to 0. So maximum employment doesn't, on a sustainable basis, if you're creating 0 jobs, if it's in equilibrium, if it's in balance, it's a pretty, as I said before, a pretty curious balance. So, I thought, and many of my colleagues thought, in fact, you've seen the last 2 meetings, that it was appropriate for us to react by supporting demand with our rates. And we've done that. We've reduced so that rates are looser. I wouldn't say that they're accommodative right now, but they're meaningfully less tight than they were. And that should help so that at least the labor market doesn't get worse. Though it's a complicated situation, and some people argue that this is supply and we really can't affect it much with our tools. But others argue, as I do, that there is an effect from demand and that we should use our tools to support the labor market when we see this happening.
You also talked about tariffs causing a one-time price increase. Should American households, consumers expect that inflation will continue to go up this year because of those tariffs?
So the basic expectation is that there will be some additional increase in inflation because it takes a while for tariffs to work their way through the production chain and finally get to consumers. And we see this now from the tariffs that were put in place now many months ago. We see those effects, but if you put tariffs in effect, and they've been coming into effect consistently in February, March, April, May, and that's all happening. So that'll continue to happen for some time, probably into the spring. These are not big increases, though. These are a tenth or so on inflation. They may be big increases on a particular product that's been tariffed, but overall, these are fairly modest. I think, some projections go, we're at 2.8% inflation. You might get 2 or 3 more tenths or 4 more tenths maybe. But then, as all of the tariffs are in, they stop generating inflation. You've had a one-time price increase. As long as you're not, at least this is the theory, this is how we believe and hope that it will work out. Once the last tariff is put on something, at that point, it becomes a higher price level, but it stops going up, if you will. Prices stop going up. They'll just be at that level. And then measured inflation will come back down to non-tariff inflation. As I mentioned, non-tariff inflation is not so far from 2% now. Now, consumers are not interested in that story. Their prices are higher. More than that, the reason they're so unhappy about inflation is the inflation that we had in 2021, 2, and 3. Because, you can say that prices aren't going up as much, but that doesn't mean people aren't feeling those higher prices from the inflation we had 2 or 3 years ago. They are, and that's, I think, a large part of why the public, if you sample people, inflation is still very much making people quite unhappy. Even, and it's nice that, that prices are not going up as fast as they were, but they're still much higher than they were. And it'll take some time for that effect to wear off. As real incomes rise, it will feel better over time, but that's going to take time.
Michael Pickey from Bloomberg Television and Radio. Do you have any concerns that equity markets are or are close to being overvalued at this point?
We don't look at any one asset price and say, hey, that's wrong. It's not our job to do that. We look at the overall financial system, and we ask whether it's stable and whether it could withstand shocks, right? So, banks are well capitalized, while some households are clearly under stress. In the aggregate, households are in good shape financially, relatively manageable levels of debt. At the lower income spectrum, you are seeing rising defaults, particularly around subprime auto, but nonetheless, in the aggregate, pretty good. You don't see too much leverage in the banking system or the financial system. It's a mixed picture, but it's not an overly troubling picture. And again, I'm not. It's not appropriate. We don't set asset prices. Markets do that.
Well, you must be well aware that by lowering interest rates, you're contributing to additional asset price increases. And I wonder how you balance the idea that lowering rates would help the labor market with the reality that it seems more likely to be stimulating increased investment in AI, which is the rationale for thousands of job cuts that have been announced in the last few weeks.
Yeah, I don't think interest rates are an important part of the AI of the data center story. I think, people think they're great economics in building these data centers, and they're making a lot of money building them, and they think they have very high present value and all that sort of thing. It's not really about. It's not about 25 basis points here or there. We use our tools to support the labor market and to create price stability. That's what we do. That's our two jobs, right? So we're here by lowering rates at the margin, that will support demand, and that will support more hiring, and that's why we do it. Now, no 25 basis point or even 50 basis point hike is going to be a dispositive thing, but ultimately, lower rates will support more demand, and that'll support hiring over time. Now, of course, we also have to be careful about this, which is what we've been doing, because we know where inflation is, and we know that, I've told you the story. It's a complicated story, but this is the best assessment that we can make. Because there's uncertainty around inflation and the path ahead for inflation, that's why we're going. That's why the pace we're going has been a careful one.
Victoria. Hi, Victoria Guida from Politico. On AI, I'm just wondering, it seems like a lot of the economic growth that we've been seeing is fed by investments in AI. So how worried are you about what a sudden contraction in tech investment would mean for the overall economy? Is there enough strength in other sectors? And specifically, are there any lessons that you take from the 1990s in how you might approach what's happening right now?
Yeah, this is different. In the sense that the companies that are so highly valued actually have earnings and stuff like that. So if you go back to the 90s and the dot-com, these were ideas rather than companies, and so there's a clear bubble there. Whereas I won't go into particular names, but they actually have earnings, and it looks like they have business models and profits and that kind of thing. So it's really a different thing. The investment we're getting in equipment and all those things that go into creating data centers and feeding the AI, it's clearly one of the big sources of growth in the economy. Consumer spending also, though, has been, is much bigger than that and has been growing and has defied a lot of, negative forecasts, continuing to do so this year. The consumers are still spending. Now, it may be mostly higher end consumers, or maybe skewed that way, but the consumer is spending, and that's a big chunk of what's going on in the economy, substantially bigger than AI. You could point to growth. I mean, actually, maybe growth as opposed to level, but consumer spending is a much bigger part of the economy.
And why do you think that the labor market is slowing so much, even though consumer spending is strong?
Why has it slowed so much? Well, what's happened is that the supply of workers has dropped very, very sharply due to mainly immigration, but also lower labor force participation. So, and that means there's less need for new jobs because there isn't this flow into the pool of labor that where people need jobs, because there aren't those people now. So there's not a supply of workers showing up for jobs. In addition, demand has also gone down, and so has labor force participation has declined, which is more of a sign, in this case, of demand as well as trend. So I think you're seeing some softening. The economy's growing at a slower rate than it was, 2.4% last year. We think around 1.6% this year. It could have been a couple of tenths higher if not for the shutdown. And of course that will reverse. But you still got the economy growing at a moderate pace.
Andrew.
Hey there, Andrew Ackerman with the Washington Post. I wanted to ask if you could elaborate on how you think about policy in the context of the data drought. Does it make you inclined to stick with your plans as set out in September in the absence of the data that might change your mind, or does it make you inclined to proceed with added caution because of uncertainty?
Yeah, well, we'll know when we face that question, if we face that question. It'll probably be argued both ways, right? But I've said a couple times here that, if you really aren't getting information and you really don't know, and the economy looks like it's solid and stable and hasn't really changed, there will be an argument. I don't know how persuasive it will be, but there will be an argument that, you slow down when you can't see as far ahead. Others may argue, I'm not sure where this argument will come, but you're perfectly right that you could also argue, well, things haven't really changed, but you might not know that, So I don't know whether we'll face this or not. I hope we don't. I hope by the time of the December meeting we're getting, a better flow of data. But if we're going to have to do our jobs one way or the other.
Okay. I also just wanted to ask a FinReg question. I think several years ago you said the overall amount of capital in the system was about right. As the Fed moves forward with a revised Basel proposal, potentially changes to the GSIB surcharge, has that changed at all? Or are you planning to significantly reduce the amount of capital in the system? Thanks.
So there are discussions going on, I think, among the agencies, and I don't want to get ahead of those discussions. I continue to think that the level of capital, when I said that in 2020, was about right. And of course, there's been much capital added since then through various mechanisms. But I look forward to I know those discussions are really just getting going. They haven't come to the point where they're, got a whole plan and that kind of thing. So I really don't have much to say on that.
Brian.
Hi, Chairman Powell. Brian Chung with NBC News. Is the weakness in the jobs market accelerating, and who's at risk if the interest rate cuts are not the effective medicine for a further slowdown in the labor market?
So we do not see the weakness, as you put it, the weakness in the job market accelerating. I would say, then again, we didn't get the September employment report, payroll report, but we look at, the unemployment insurance claims, initial claims, are reported at the state level, and we still get those, and we can accumulate them and get the national number. And there's really, there's no story. You can look at the numbers. Same thing with the job openings we get from Indeed. There's just no story over the last 4 weeks. It's kind of stable. So you don't see anything that says that the job market is, or really any part of the economy is making a significant deterioration. Don't see that. You see more things like I mentioned, though, which is you see big companies making announcements of either of layoffs or of the idea that they won't need to hire. Their number of employees is not expected to go up over a number of years. There may be different people working there. They say that too, but they don't need a bigger head count. So you see those kinds of things. You don't see it in the aggregate numbers. The layoff numbers have not gone up, but job creation is very low. And the job finding rate for people who are unemployed is very low. But the unemployment rate is very low as well. 4.3% is a low unemployment rate.
So as you make these cuts, is it the lower income workers that you're thinking about, or those who might have their jobs automated? Is there a particular section of the labor market that you're particularly?
So we can't, our tools don't allow us to target any demographic or any income level and that kind of thing. I do think that people, we saw this during the global financial crisis and the long recovery. If you have a long period of very strong labor market conditions, it benefits people at the lower end the most. The last 2 or 3 years of that long expansion, people at the lower part of the income spectrum were getting the biggest benefits, and lots of things were happening in that space demographically, which were very constructive. And we're not at that place right now. But so, yeah, a stronger labor market is the best thing we can do for the public. It's also part of our job. It is half of our job, but it is absolutely the best thing we can do for people. Along with keeping prices stable. Those two things. Inflation also hurts people on fixed incomes more than other people.
Courtney.
Hi, Chair Powell. Courtney Brown from Axios. As you know, the 12 Reserve Bank presidents' terms are up for renewal at the end of February. I'm wondering if you can give us a timeline for when the board will consider those reappointments and whether we can expect everyone to be re-upped or if we can expect some changes.
So it's a process that we go through under the law. The way the law works is we have a reappointment process every 5 years for all of the reserve, each of them and all of them. We're in the middle of that process, and we're going to complete it in a timely way. And that's really all I can say.
Okay, thank you.
Daniel.
Daniel Davis, Agence France Presse. You've now had dissents in 3 consecutive FOMC meetings, but in this meeting you had dissents going in both directions, and you've just mentioned there's strong disagreement over the future path of rate cuts. Have these disagreements complicated your role presiding over the FOMC meetings, and if so, how?
I wouldn't say that, no. I think you have to take what comes, and what comes right now is a pretty challenging situation where we have, first of all, we have 4.3% unemployment. We have an economy that's growing close to 2%. So, overall, it's a good picture. It's a good picture. But in terms of our policy, we have upside risks to inflation, downside risks to employment, and this is a very difficult thing for a central bank because, one of those calls for rates to be lower, one calls for rates to be higher. We can't do both, so we have to balance the two, and so it's a challenging thing. And as we have worked our way through this process, you would expect that there would be a range of views across the committee on what to do and the speed with which we should do it. And that's what we have. That makes a lot of sense to me. All of these people are, people who take their jobs very seriously, work very hard at this, and just want to do what's right for the American people, but they have different views on what that is. And, it's an honor to work among people who care that much. It is, but I don't feel that it's unfair or anything like that. It's a time when we're making quite difficult judgments in real time, and I believe we'll get through this. And I think we've done sort of the right thing so far this year. I think it was appropriate for us to be careful about this. I think it would not be appropriate to just ignore or assume away the inflation issue. At the same time, I think the risk of higher, more persistent inflation has declined significantly.
What's going on, guys? Listen, let's let me know if who's in the comments is. Let's go, guys. Let's go. BTC holders need to hodl. Absolutely. Listen, if Caveman is there, if Cliff is there, any of you guys are there, do let me know. Let's talk the market. You absolute legends. Bull market's gonna happen. Alt season's gonna happen. And for me personally, right now, I'm looking at long-term, guys. All this day-to-day focus on the candles and what's going on, it's not going to help us. They are officially pivoting. And as a result, right, at some point, we will have a massive risk on market. Okay? So there you go. And let me see if I can invite some of you legends to go grab the mic. Anybody can grab this mic if you guys want to come up and have your say. But I do believe, and we will talk about some of these amazing HB in the building as well. Smash the like, family. Stop playing and let's help our brother. Man, they never smash the like, bro. Like, people are really stingy with the like. We've got 190 people tuning in, but to be honest with you, we could do even more. Let me stop that smash the like button there. That's been it's going around like mad. Let's just take this off. All right, cool. So guys, in this segment of the show, we will talk about this in more detail, but what I want to do is send some of you up here to join me. If Caveman is there, it would be great. If not, I think Cliff should be there as well. I'm looking for some key perspective from my wonderful audience. All right. So let's make the show a bit more interactive, guys. And let's see who's around to talk. Jim, I would love to have you up, brother. Absolutely. Liquidity has not hit yet, but it's about to come. Alexis says, I don't like to smash like. I like to smash Latinos. Alexis Sanchez in the building, bro. Yo, Jim in the building as well. Liquidity has not been hit. It's about to be. The market will explode with liquidity. Absolutely, brother. That is a beautiful take. That's exactly what's going to happen. But we are going to position ourselves for greatness, guys. It's like Latino. That guy is hilarious. But yeah, let me know, Caveman, Jim, any of you. Don't be shy. You don't have to turn the camera on. We can talk about alt season and I can get your views. I think this is one of the most important questions in crypto right now, brother. And yes, I do think that this shit runs into 2026 quite significantly. I think it's going to be just the start of a longer process. Why? Because of the timing of everything is quite strange, man. Like, liquidity about to hit the markets, yet liquidity is not there yet, hasn't been tapped, like Jim said. And in terms of the overall performance of these cryptocurrencies right now, what we're seeing here, look, this is, for example, the kind of predicaments the market is in right now. Everything looks to be in a challenging environment right now. Having said that, I do believe we will come out of this. I mean, this is the SUI chart. Look at this. Let's go to a higher time frame. Let's go to the daily here. You know, with the news, as always, you see things more clearly, right? You know, they'll obviously announce more major macro news in the days and weeks ahead of us. And of course, one thing that is for sure, the Fed has decided to end QT, right? Ending QT is a major boost for us, guys. So if you look at our assets like this, like your SUI network here, right? It's only a matter of time before we start getting back in range and exploding to the upside. But between now and then, I think there's some bargains to be had. This is SAY, right? Bouncing off this liquidity order block here, looking very solid. And again, that's the daily candle right there for SAY. Very interesting resistance here on this macro, massive, huge order block here on the 4-hour resistance. So it will take some time to play out. We don't expect anything to go absolutely instantly. You know, that's the short-term mindset that sends everybody back. But I can see here Chainlink being one of the stronger ones. Again, look at Chainlink here. Everything in the last. Let's have a look at the 2-day candle here. 2-day chart. Yeah, we're seeing this to be. It's going to be very interesting, guys. It's going to be super interesting. And I do believe, let's have a look. Let's go. Let's go check. I mean, even some of the shit coins are actually, look at WIF, for example, because what you want to have is a list of things that you can actually buy for this alt season and make tremendous money from. So when you actually look at, for example, meme season, you look at stuff like Dog with Hat. It's an indicator of how well Solana does. And if Solana moves up, some of the big cryptocurrencies that are specifically linked to the meme ecosystems do tend to do really well. But look at one of my favorite cryptocurrencies, the savior of my bear market, and that is Bitenso Tau. Tau has been absolutely colossal, right? It has absolutely been ginormous in this entire situation here. You know, it has. Let me just get rid of these messages. Let's have a look. Any thoughts on Solidity's AITECH? Have you seen Lil Pepe? I haven't yet, bro. I haven't yet. But we'll definitely take a look. Let's have a look at this. So, all right, okay, cool, people. Let me get something here. I will look at little Pepe there, which we can look at as many shitcoins as we want. Do you know where you're going from? So guys, do let me know. Gary. Yeah, this is no doubt, brother. That's a very good point you make there. That's a tremendous point here. First cycle with high leverage trading, which has stunted the rhythm, liquidity hunting, all sides. When volume hits the incoming liquidity, those gains will be diminished, or gains will be diminished, and of course, stop plays will be absolutely rock solid. I agree with you 100%, brother. I agree with you 100%. And let's have a look at the. So, yeah, I think that those are going to be massive. You know, again, it's all about a waiting game, man. Bro said, "What do you think of Solidius AITECH?" Well, Agent Forge should change the game, right? Agent Forge is an AI agent, and we know, of course, the AI agent in terms of the payment, that's going to be pretty big. We know, of course, X4 420 or X4 2 is going to be quite crucial. Coins like Banker have been popping up. What AITECH has is AI agents that are specifically marketed to wider business. And that's where the business case is for me. And in terms of the growth and in terms of the potential to actually make a decent gains on AITECH, I think it's going to be huge. So yeah, I do like AITECH. I've been holding it for far too long now. At some point, I do really want to have, I want to empty that bag, that clip in one session, if I could. Of course, you guys will know when I'm selling, as always. And it's going to be quite crucial for us to be able to take any pumps very seriously this time round. And again, take profit. So in terms of, I mean, what else was I looking at? Let's go and open. So the next question is, so this was Little Pepe, right, Artie? Yeah, I'll check that out on Dex. Don't forget to subscribe, people, by the way. It's going to help me, or like the video. All right, one of my favorite questions here is the Tau ecosystem. So what tokens do I like? I think Shoot, Regis AI are very much stand out. TauBot has also been running with Bitensor Tau. And for those of you who don't know what the Tau ecosystem is, these are a set of Tau ecosystem projects that are specifically traded using Tau. I'll just show you here. So when it comes to Tau and the Tau ecosystem, I mean, look at Shoot here. Of course, the market cap is way bigger than that, but it's 247K, 74K. That's not what it is, but Targon's another one. There's also Sport Tensor. There is also what you call the Neural AI, which has its own subnet token. And you actually start to see real validators here, the likes of Kraken, 100,000 Taus, and of course, Tau Stats, TauBot, which is also quite crucial. Change over the last 24 hours is 4.5K Tau. And of course, Root Network is another one. But Shoots and Regis AI offer a real world applications, in my opinion. I think they're going to be very, very huge in the next few years to come. There are also, so let me just find these for you by market cap, because it's quite important to see what these do, what they mean, what are we looking at. So guys, decentralized AI is the future ownership, just like tokenization is. So I've always been saying, as of late, there are two particular crypto categories. Let's just put them into one, in my opinion. That is AI and So what you have here is the entire ecosystem of BitTensor Tau. Now, and this is why Tau has been rallying. Of course, you've also got new coins here, but these are all real life businesses and projects that provide real solutions. So if you look at Shoots, for example, this is the max chart of Regis AI, sorry. And this is subnet 62. Now, if you look at this, 98 million fully diluted, 10 million in volume. But one thing that's quite funny is the absolute markets where you buy these. You can only buy this through TauBot or Tau Stats using BitTensor Tau. And the volume, the $10 million in volume is purely coming from that. There is no outside influence for example, for Shoots or Subnet 62. So that's crazy. The fact that it's up 6x nearly. And I did do a video on these BitTensor Tau subnets. One thing you got to take is these will be absolutely ginormous, in my opinion. So AI platform, autonomous agents, right? So you've got to look at Tau. Like Tau will give you exposure to AI agents in the long term. That's just one of the many projects that are becoming like, say, 100 million, 200 million. Cognifi is another one here, $300 million. We looked at Riches, and this is Shoots, which was actually slightly bigger before, has dropped since. Serverless compute for AI at scale. So this is all on the back of Tau. And you can only buy these by using Tau. That's why the Tau price has been ginormous as of late. The take on Nosana, very good question. Look, one thing I've actually been tracking, NOS has been holding up better than other tokens. That's for sure. For a long time, it actually holds. Look at this. It's just been sitting here. Look, these are 50, 60 cents, 55, 60 cents. So this is the lowest it's been since a long time. So Nosana will be a decent deep in play on Solana. There has been some FUD over time, but that FUD has started to disperse somewhat. In the end, the chart has bottomed, but I think this will do very well. Access AI compute power, monetize your GPU. Guys, I'm very bullish on Deepin because Deepin offers the one thing that most cryptos don't, and that is a tangible physical contribution to crypto. AI is the same. Without Deepin, there is no AI. Without computational power, there is no AI, my friends. So AI and Deepin as a niche will be a first kind of trillion-dollar category, in my opinion. So projects like this, I did like Nosana. I did buy it a couple of years ago. I did trade it and I haven't bought back into it, but it is at its lowest for a long time. Now I need to obviously go back and look at FUD or whatever that's happened. But the fact that I'm telling you that price has not, for many, many months, yes, it's come down, but look at this. It actually found a very decent supporting range. So I do like it. Your opinions on ALF? I think ALF is got, just like with all the other smaller coins, has suffered a lot. You guys know that I've done more for this project than most. Like I have invited these guys to be on the show at least 3-4 times. Maud is a very good friend of the channel. Unfortunately, what you're seeing here is a very much a less attractive chart due to market conditions. And of course, it did pump significantly. So the question is this the end for ALF? I don't think it is, in my opinion. It's all down to volumes and market conditions right now. But I do believe if the market returns with good liquidity, we're getting the pivot right now. I think Alpha is going to do very well as a layer one with some decent attention. And literally, they went to resilient layer ones. You saw Cadena team fold the other day. So these guys are doing all they can, internet supply chain and other things, and they're holding spaces, and Bridge is live. So the team has done a lot, to be honest, against a very negative price. And their biggest event to date came in January during the Gigaton partnership announcement in Abu Dhabi. Unfortunately, that was met with literally 24 hours later by the Trump dump. So it's going to be a long way to recover, but I am hopeful as we go into the pivot. Bro said yes, that is a total shitcoin. No worries, bro. No worries. Oh, sis, that's my sister right there. Welcome back. Welcome back in Belta in the building. And big up to the Netherlands as well. Yeah, all good, Peter. Mr. Morton, how are you, brother? We missed you, man. Haven't seen you for a few days. I haven't seen Astrid Intelligence yet on Tau. Could take a look. Maybe I have, maybe I haven't, but I don't think I have. We've got the subnets right here. The validators. Let's view all the subnets. Yo, Tau's going to make us rich. I'm telling you now, in 5 years, 4 years, life is quick, life is short. But when you think of the ownership of decentralized AI, it's going to be nuts. I think Tau is going to be like 50K, 60K, whatever, 40K in the next cycle. I have no doubt about that at all. There will be a massive crash in crypto. Things will come down. After they come down, go into a bear market, and then see what happens. But it will make you free within 2 short cycles, in my opinion. Let's be fair, guys. A lot of us who've obviously been in the space for a while, you make money over the long term. You make money over the long term. The problem that we've had this time it's just the fact that it was the first meme super cycle of its kind. And memes will still do very well, but fundamental plays haven't really seen any liquidity at all. Welcome back, Pratik, my brother. SN25 is a good one. Subnet 25. Let's see what Subnet 25 is. In fact, let's bring out all these subnets and go through them. So subnet 25 would be Dippy Studio. Volume, 2% of the market cap, 21 million supply, 12 million market, 12.3 million market cap. Looks, let's see what's going on. Decent emissions, 1%. Interesting. See this chart. I mean, this is the thing with the subnets, right? You will get, you get periods like this, right? Because not everybody can trade on the Potenza Tau network. You see long periods of consolidation where there's no dump or pump at all, and then you get these occasional huge candles. Pretty good. That subnet 25. We'll definitely take a look. Subnet 127. Let's have a look at subnet 127. I actually love to scan through these. Sorry, let's just go 13. It's funny because the 127 is, what is it? Polaris Cloud. Yeah, I've heard of this one. And again, guys, don't forget, we're super early to these network, subnet tokens. This only has, look at the number of holders. It's a joke. For anyone who can't see, 700 people hold this. So we're very lucky to be super incredibly early. And that's, subnet 127. Yeah, Artie, thank you. Appreciate that. Hit the like button and show some love, support for free inside. Nah, thank you very much. I really appreciate that. But guys, we are going to be we're going to be rich soon. I know crypto has made us into, let's be fair, man. It's been a shit cycle. And it's really turned us into kind of like, let's go to the bubbles first. Let's go to these. Let's go, let's go down to bubbles. A bit more color rich. See what's going on in the market. So look, Trump is up nicely. Pumped up fund is up 10%. Zcash, if you're looking at Zcash, do not ignore Near Protocol. And apart from that, the market is generally, let's go to the live bubbles here. Let's go to the 1 hour. So yeah, market is holding tight. Despite the volatility of the day, long term, USDT will be massively deployed. So I did highlight the other day 100 million transfer from an unknown wallet to the Binance wallet. And 100%. I do appreciate that. Much love to you. And Artie, the problem is it has been a shit cycle. People have been absolutely ruined. I know few people that are seriously out who were big traders in Dubai, like massive. I'm talking about multi-million-dollar positions. You saw the story of this brother here, rest in peace. This guy was literally with us a few weeks ago, and he's no longer here because of trading, like crypto, right? So the ramifications of the industry that we all love, and let's just, we have to keep mental health in mind, guys, honestly. So we all come together as one to try and beat the industry as much as we can. That's all I can say. But this was crazy. Like, this kid died, this young man lost his life because of, essentially, of course, leverage is crazy. This was just a reminder that life is there to be lived. This is a massive loss he had because of this announcement. The market makers started to manipulate this shit, and the brother died. He took his own life. Ironically, he was found dead in his Lamborghini. Money doesn't do anything, guys. You have to remember. Like, I'm trying to get, I've became a lot healthier. I started going to the gym 2-3 times a day. I eat better. I spend more time with my family, with my daughter. And I still dedicate 10 hours a day to something I love, which is cryptocurrency. But even through my own personal journey, the last 3 years compared to the 3 years before the 2021 cycle, they were completely different. I'm running a community. Everybody will end up making money and losing money, but most people get depressed because it's the gains that we give back. So unless they hit your bank account or stablecoin account, those are unrealized gains, right? Those are completely, worthless numbers on a screen until you turn them into stable coins and you literally, not even then, withdraw some of that into different assets, into bank accounts. So as we on the eve of liquidity injection into the market, on the eventual pivot that we've been waiting for the last 4 years, 3 years, the Fed has been tightening since 2022. We're now talking about printers going off and printing trillions and trillions of dollars. You are going to make money, but the vast majority of people will give back the gains. And you've got to learn. You know, I've had some bitter pills to swallow. I've had leverage wipeouts. You know, not as crazy as other people, but I'm thinking somewhere sometimes, you know, cumulatively, maybe $250,000 cumulatively over the course of a time. You know, I've lost on some spot positions. I've sold some too early. I've sold some too late. You can come back if you lose everything. You cannot come back if you're sick, if you're mentally unwell, and if you neglect your relationships, right? So take it as advice from a good position. Yes, you need to be in this game, but be in this game healthy. Be in this game at your best. You know, go turn up at your work. Don't look forward to the day you quit. Make it happen. What do I mean? Make sure you're turning up with a smile. You're doing your mining USDT, and you understand the reasons why. That's why money you could always get a job. You could always build yourself back up if you've lost everything. And there will always be another cycle. But there will never be another you who loses everything and then mentally falls sick. And then every day you blame yourself and others for your predicament. It's okay to lose. What's not okay is to not learn, right? So I hope you take that from a good place. And, you know, again, rest in peace to this brother here. And that's what we've been like. We've had a situation, and there's a beautiful comment here. So last cycle, the Fed has started with QT and raised rates 100%. And he lost his client, you know, exactly, bro. Exactly. He lost himself. This one's super interesting. Kaspa is dying. Well, let's have a look at CAS, because I don't think CAS is dying because of the market. I think Kaspa has never been healthier, in my opinion, than right now. So this chart doesn't look like it's dying. There is a level of consolidation at 5 cents that goes all the way back to September 2023 and not far off the April 23 highs over there. So Kaspa is absolutely far from dead. What I think has happened is the smart contracts, the centralized listing, all of those good things, all of a sudden we've become far more attractive as a mega investment now than say 12 months ago when it was going through the kind of the first real dip that it's had. But, you know, this is a fast protocol. You're now going to start recording TVL on DeFi Llama, and you've obviously got a thriving layer 2 scene. So yeah, Kraken now was the latest exchange. I believe it was on Kraken, and there was another big exchange, potentially Binance maybe, who've been buying this. I don't have any evidence now, but previously there have been Binance linked wallets. And I think this is the future of money, in my opinion. If you're doing a simple P2P payment with a thriving DeFi ecosystem, then let's just call it the poor man's version of Bitcoin, right? Nothing wrong with that. So, yeah, I think Kaspa's time is coming. I think you're right. Some of the hype has been dying down, but you know how crypto is. We get the hype back from an exchange listing. You know, so yeah, these are all facts. Facts. Now it's the opposite. People are burnt out in a volatile market. Fed is pivoting. People have no stable coins left. And there's always a McDonald's nearby, Alexis. If you lose it all, not even McDonald's, man, you can go do whatever. Never look down, never ever look down on any profession. But I hear you. I hear what you're saying. Is Linear a good buy? I think Linear will do well. I think they will get Linear. Again, there was somebody in the comments in a video that I previously made saying that, Base is not a competitor to Linear. I tend to disagree. I think they are. Because his argument was Base is for retail and Linear is for institutions. There is some truth to that, but the thing with Linear is, you guys know about the MetaMask airdrop that's coming. So this is the lowest. I mean, there's been an airdrop here, fully diluted, doesn't look that good. But who are Linear? And Linear is basically Ethereum, Consensus, a layer 2 that is, the fully diluted for me is wild as well. So you've got like 20% circulation. But look at the trading volume, right? And you've the tokenomics are wild, like I said. You've got this much, right? 15 billion out of 72 billion in circulation. Yeah. So for me, when you look at it that way, it is not, let's say, perhaps the best investment. And then of course the price hasn't been doing any crazy things. So obviously you look at those things and you think, okay, Linear is completely and utterly a no-go. But there is always a big but here. Who's Linear? Who's behind them? What is MetaMask doing? What's happening with the airdrop for MetaMask? And what is the institutional adoption of Linear? So you're already seeing SharpLink Gaming and Linear, of course, Linear.eth. And of course, what you're seeing is a bunch of institutionally led, look, Rex here as well, decent play. EtherX Phi, I think that's a good play on Linear. But what you're seeing, there was rumors here that they were going to work with Swift. That's the pulling power of these guys. Having said that, I need to go back to the tokenomics for us to be able to study that. But it won't be as low as it is right now, in my opinion. These guys are specifically Wall Street friendly, right? You've got links to, Linear build here with Swift, and that's the news I was looking for. Consensus here. Again, somebody was asking me about the DEX play, EtherFi. It gets mentioned in all of their posts. So you have to pay attention to chains that will offer value. I think the true sense of layer 2 value has been completely it's been dominated by Base. So what is the next thing? And again, like I was trying to debate with someone, if Linear is more institutionalized, I think it's going to do very well. Having said that, of course, $200 million in market cap, nearly $1 billion in fully diluted, fully diluted cost. And again, guys, this is what I was talking about earlier. MetaMask is coming to play with its own token. So, of course, if you've been rugged over the years, if you had to deal with a lot of issues here, I think this is going to be a great time to explore the the entire ecosystem here. But yes, EtherX or Rex is literally right now $6 million. Fully diluted 60 million, and this is going to be, this is going to be the version of Aerodrome. Let's give these guys a follow. So right now, linear DEX, and it gets mentioned everywhere with Consensus and everybody else, $6 million. I think this is a steal, in my opinion. I think this is a fantastic buy. So when we get linear season, this is going to be the play, and 100%. I do agree with you, Alexis. Yeah, you should get Rex if you're bullish on linear. 100%. 100%. I think this is a very good project, in my opinion. Oh wait, hold on a minute. I've just seen my brother, the wonderfully named Madman. Guys, trust me, you should be giving us a like for this stream purely on the basis of my brother being here. What's good, Madman? Hope you're doing well. Let me know, guys, if anybody wants to come up and have few words, I will send you a link. So, guys, this is why I think it's going to do very well. One, it's going to be backed by linear, Consensus. They're in bed with the stock market. Ethereum. I think this is a potential massive play. I have already shared a buy link. I am actually down on my average. Maybe I'll grab some after the show. But I do believe that these guys will ultimately do very well. I think Rex will be a great DEX. And I need to just refresh myself on the liquidity pools and the entire economy. Clarify errors on linear's ignition tweet. Liquidity pools who participated in ignition over the last 10 weeks will be able to claim 40% of their linear rewards. Blah, blah, blah. What are we looking at? Stop using linear as events rewards. All right, cool. So yeah, that's a good shout. That's a very good shout. Yeah, Trump token doing absolute numbers. And Near Protocol here, I think Near will eventually hit $10. And I think it could go even way beyond that. Because this is the only one of the few. This and Aptos are great trades. Because Aptos' stablecoin market is literally growing by the day. Let's see what Ondo Finance is doing. Has actually been very... You know what's funny, right? Ondo is an interesting one because you've got 31% of the supply in circulation, and you practically got Wall Street building on this. So, I think that is a great second cycle coin, in my opinion. Bro said, any updates on MAVIA? And of course, yes. And I don't know if you've seen, wait a minute. Let's have a look. If you put MAVIA into your search, the first video that comes up is a DXB crypto video right there. Here is a MAVIA. And of course, the latest news here is it's basically the news that they've bridged over to BNB, previously on Ethereum and Base, and that's just to unlock liquidity, right? So, in my opinion, I think that's gonna do very, very well, and yeah, you should check that out. So, I think it's too early to put the kind of traditional 20x, 100x your money, but I genuinely believe something like that is a potential 100x. Will you be there to get 100x? Will I be there to get 100x? I don't think so, because after 10x, trust me, I know how crypto psychology works, and I think it's going to be. Sometimes we YouTubers are very guilty of saying this is going to 1000x or 100x, but I can genuinely say with a better market conditions going into QT, most of these alts will friggin' do numbers, especially these micro caps. And in Mavia's case, they've just unlocked liquidity into BNB. And there's a meaning behind that because they use Wintermute as their market makers. So I can tell you now, it's a crazy prospect. So yeah, bro said virtuals protocol. I see the next comment. And Tao Peter Morton, thank you, brother. It's definitely $1 trillion asset in virtual bolt. 100%. Look, when it comes to what we're seeing with AI agents and what we're seeing with decentralized AI, and we look at the relative strength of this project, which really doesn't go like with all the problems that we've had in crypto over the last fortnight. I've been paying attention to Virtual's protocol strength. And look at the volume. Of course, there's a new meta in town, if you haven't seen, about AI agents working with payment gateways. And that is the purity of decentralized finance, but it's happening through AI agents, right? So what you have is, you know, you have the craziest, you know, this is a almost 50% market cap to volume ratio. Call it directly 40%, bang on. And that's just insane, right? Absolute insanity. So this is going to be like, I'm saying to a lot of my friends, family, you guys, I'm telling you, you know, buy into things that really matter in terms of the majority of the allocation and then see what happens. But, you know, looking at these is kind of like, it's funny because the market is lopsided at the moment. But overall, I think we still have fantastic trading entries, you know. Look at the stuff that's pumping and look what's happening. If you don't believe in alt season, look, you're seeing spikes now in the top 100, right? You're seeing things in the top 100 that are all of a sudden kind of moving, while the price of Bitcoin here is down Bitcoin's down 2.6%. And then you've got these crazy things that's happening. You've got this one here. You've got virtuals. You've got even injective here. It's weird. Like the market is moving without the price of Bitcoin doing absolutely negative numbers here. Bitcoin is down by 2%. So hopefully it is time for us to really monitor the top 100. Because what you need is the top 100 to outperform Bitcoin, and Bitcoin dominance is going to suggest that to us as well. So, you know, let's have a look at Bitcoin dominance. And I can bet you now, Bitcoin dominance is not finding strength. There we go. There we go. Dear Bitcoin dominance, you are about to start rolling over again, right? Because what we're seeing here is a candle reversal on the weekly. And you're seeing a massive candle print on the daily. Happy days, guys. We need Bitcoin dominance to absolutely fall off. We're going to do anything nice here, you know? And break this daily trend again. And that's exactly what's going to happen. And it does happen and has always happened, guys. You know, so we have obviously this level that we got rejected from. But Bitcoin dominance for me is hopefully going to find a massive bearish continuation to the downside, potential head and shoulders formation, and then off we go. Amazing, bro. I think, listen, if we get a $10 MAVIA with the way people have been accumulating, I think we will do very, very well. Do I think the price of MAVIA is reasonable right now? I think so. Let's have a look at the normal chart on Mexi. So look, the current price, actually, you know what? Let's go to the weekly candles. Okay, so when we look at reasonable, a chart like that is never a reasonable chart, right? You can clearly see this chart is done absolutely F all since launch. So they literally pumped us, they dumped on us, and they've been dumping it. And now it is today, I think it fell 38%, which is normal. Which is normal. But here's what I predict that's going to happen, right? So if we look at the daily, let's actually, you know what? Let's have a look at the smaller time frames here. So look, what you want to see is it did have a fantastic support at these levels where it's kind of pulled back to now, right? So this is kind of like the 4-hourly chart. You will see a massive demand over here, but it's kind of been tapping that region anyway. So there is demand. So if you think, let's just think of it's just economics, right? Supply and demand. Where are the biggest orders for both buyers and sellers? You know, that's how the market works. And if these orders exceed at a certain price level where the demand goes, so there was massive demand here, look what happened to the price. And then we started to hit the resistance over here. Boom. And the price fell. The question is right now, where is the price of the VWAP in relation to its true price? So this is the volume weighted average price, and it's quite simple really to gauge what this does. So here's the condition. What you need is if the price of an asset is below the VWAP, the price of that asset will remain bearish, right? So this is all of the price weighted together. It's called the volume weighted average price. And right now, regardless of what the price is doing, the price on the 4-hourly is below the VWAP. Now, if the price, however, is above the VWAP, okay, if the price is above the VWAP, then it is considered to be, the asset is considered to be bullish. So in my opinion, I would say at the moment, it should stay around this level. Why? Because this is the strongest support level that we've seen for MAVIA. The price has been absolutely solid there. Broke down once, stayed here, but demand was already taken. I think this was the low. 7 cents was the low for MAVIA with the crash, and ever since it's been going up. And I would be very surprised if it comes underneath this level around this 10 cents, 12 cents. You are absolutely, unless something major breaks again in the market, I think this is the bottom for Heroes for MAVIA. So, you know, from that, in terms of the overall price projection, it's very difficult to see. You know, I can see this being a realistic top again. Maybe it does that, you know, infamous W formation that we've seen assets do in the past. It could definitely do that. Or let's check some. Yeah, it could definitely do that. Alternatively, you may actually be a bit more surprised with what could potentially be in store for this asset. You know, nobody sells, you know, when an asset goes up, Nobody sells at the absolute top. Nobody does that. I don't care who you are. Bots will not even sell at those levels. So what can we realistically expect from here is a MAVIA? Well, considering where we are now, I think these lower fib levels are all acceptable to me. And again, this is definitely could happen, but $40 above, let's not push it there. You know, you've got, I don't know, 10,000, 15, 20,000 of these, 100,000. Some of my friends have 200,000 of these accumulated. So the chances are you're not going to wait for $45, right? According to these fib extensions, right? So don't base your mathematics on these higher fib levels. Then you've got, so if that was your kind of like crazy target, then you've obviously got this second target area again, the 3168. You know, I think this could happen, but again, I would only have maybe 15%, 10 to 15% to try and offload here, right? Then what we got is this entire juicy area, right? We've got this whole entire area here between $27, right? So we've got 2.7 here, all the way down to $10, to $10. It could happen. This is a pretty much a massive area. Or you could be like one of those clever investors and you can start taking profits. And again, you know, above $1, let's be realistic, from $1 to about, I think, $8 to $10 is a very good target. In fact, I would even go as far as saying, look, man, if you start selling this between, say, 7.5 to about $10, I think you're winning. The majority, keep a small bag here. You know, if the market surprises you, then great. You know, market would go, hey man, I'm gonna rip regardless of you. And you may get to these fib levels super early. So don't be too late to sell. Don't be eager to dump all your bags at the first move. But taking profit has never hurt anyone. And at the earliest signs of $1 and above, I think they become incredibly attractive to start getting rid of some of these bags. But total fib extension, very, very top, $40, $47. And low projection, $5 to $7. All-time high, previous all-time high target here, $10. And then, of course, price discovery comes at $11, $12, $13 and above. Doodles has been going up. Crypto spaces YT. Token holding up well. Yes, bro. Doodles is, to be honest, you know, when I first saw that, it was on a live stream over here. And look, you know, relatively launch, you do expect the price to come back. And then, of course, the price has been rocketing in the last few weeks. These are the daily candles. But if you see this, isn't it funny, right? These institutional order blocks never miss. They never, ever miss, man. You've got an order block tapped here. Price goes up. We've got more liquidity over here. Price goes up. Liquidity here. Price goes up. Then all of a sudden, we tap the top end of this massive sell wall from 18 cents. And what do you see? You got rejection here. Of course, first initial candle rejected, bounce back, rejection again. And then I'm sure there might be some kind of a wick here, but got the recent bounce. So yeah, relatively, I mean, compared to how it launched, that first daily candle is freaking hell. That's a beastly candle there. But yeah, good project, bro. Great. When you spoke about it a while ago, remember? Yeah, exactly. Crypto space is legend. Yeah, Aptos is mental. I think, the thing about Aptos is even if you do trade APT, USDT, even if you trade, like this is it's there for the taking. Even since we've been on the live stream, it went from 31 cents, $3.31 to $3.47. But the thing about Aptos, most people will not actually remember is the level of stable coins on there. Is ridiculous. Let's have a look. Let's go to Aptos. Man, I think they've got more stable coins than you can imagine. Their stablecoin market cap is nearly 2 billion. You know what I mean? Like that's like people don't understand. That's going to give somebody a good return even on a low leverage exposure. Right? $1.618 billion of stable coins. I think in terms of ranking, this is like, where was it? Like I saw it somewhere. It's actually up there with the likes of Sol and others on stablecoin metrics alone. So Aptos is a beast of let's go all time. Like let's look at all of the chains. See what we get here. So remember I talked about the total value of DeFi locked in 2021 has not actually been breached at all. Well, that still remains the same, guys. If you look at this, like if you're really looking for a bull market to take off, you can see here, 2021, 2025, and you haven't even gone, like literally you've gone near this in, what is it? Actually did kind of peak up on 6th of October, but you have not gone anywhere near as a market to be able to actually beat 2021's stablecoin highs. You have come close. Yes, we were in a bigger cycle, better cycle, larger cycle, all of that good stuff, but we're nowhere near there. Now, in terms of Aptos, which is what we were talking about, let's go back to... All right, so if we look at all of the... See if I can rank these for you. Stable coins. Let's go to stable coins. Holders. If you look at all of these protocols inflows, and you look at their stablecoin market caps, there's a way to do this. Protocol rankings, stable coins, come on. Stable coins. See more. So yeah, if you look at stablecoin rankings, I think it's absolutely insane. Aptos is in like top 5 or top 3, something like that. So yeah, it's insane, man. It is absolutely insane. Recent updates and maybe overtake Solana. Yeah, and TPS as well. That's crazy. So that's a very good trade. That is an incredible trade. Anybody for giggles? What is going on, Roberto, my brother? I hope you're doing well. Stablecoin market cap for Sonic. Let's have a look at Sonic S. Let's go to S. Where are you? Sonic. Let's just search Sonic. Sonic is another undervalued one, right? Since the rebranding, stablecoin market cap here. Stablecoin market cap 172 million. Now you can see, right, the TVL, against the stablecoin, like stablecoin market cap specific, right? TVL is the total value locked in the entire protocol, and that's been down. But if you look at stablecoin market cap, still relatively small, in my opinion, for a chain that was supposed to be, this chain should be over $1 billion in valuation at the very least. Fully diluted as well. That's another undervalued coin in the market right now. I don't think you'd lose money buying Sonic at these levels. The only thing is, this should be all about developers. They've got a very big, let me just show you what Sonic is. They've actually got a massive incentives for developers to move over here and to build, because they get paid probably in the top kind of 2 or 3 chains that pay developers. Sonic is one of them. AO and Arweave price predictions, multi-cycle hold. Absolute great question. So look, when I say multi-cycle hold, what I generally mean is that you could trade it. You could sell it. Yeah, in the alt season, definitely take profits. Keep an eye on it, and then buy back into the depths of the bear market. The prices that we have for Aptos and AO right now are quite ludicrous. They are pretty cheap as assets right now. So I would probably say, look, Arweave is a giant, in my opinion. And I think Arweave can hit $50 as a minimum. I think Arweave even has potential to hit more. It's fully diluted, but it is not in a sexy narrative. People think of it as a storage coin. I mean, look at this, look at this first day candle here. This is what's this on a daily? That's insane. But, all the tokens are out. The founder here is an insanely talented human being. And what you have is, you can't even actually put this into words. From the top to the bottom, 64 million tokens all out in circulation. So if you go by these FIP levels, I would say comfortably, this is a crazy area here, up to $100, previous all-time high. If you hold 1,000 of these or 5,000 of these or whatever you hold, I think you've already made a lot of money. But I genuinely believe the real potential for Aptos is between the 2618 and here. I think you can comfortably sell Aptos above $100 and below $258. But as we know with crypto, the more you hold, the more you're patient, you'd be able to get in, kind of like at least witness a price discovery, whether that is, a continued sustained price discovery, or whether that acts as a resistance, a previous all-time high. So majority of my kind of selling, just to be safe, will be in this area. But look, let's go back to the multi-cycle thing. This is an asset that's going to grow. And I do believe by 2030, we will have $1 trillion deep in AI agents, this whole virtuals, this whole entire sector will be a solid $1 trillion sector in crypto. So I think you're going to make absolute crazy numbers from that. I know Tao can take the number 2 spot. Yeah, I think so. You're not absolutely wrong there at all. Tao, like, people don't understand it. Like, I will always preach to, like, forever, that what you have with Tao is, we're talking about the ownership of decentralized AI. which means, look, even if there's an AI bubble that causes a bottom in crypto, what you will have with Tau is the independence and the move to AI using these powerful language learning models, but the ownership is not owned by OpenAI, and it's definitely not owned by some kind of a Wall Street movement. It's completely decentralized. So for me, this would be the Bitcoin of data, right? Like it's already respected all its fib levels, which with incredible accuracy, if I would say. And what do I mean by that? If you look at these fib levels here, guys, look, comes here, reaction, another reaction here. Look at that. It's insane. 786. Anytime it came over here, it just literally went. I ain't making up. It's there in front of you, black and white. This is an asset that is going to grow like Bitcoin did. Now, I'm not saying it's going to, sometimes we need to be careful with what we say here, but this asset is going to grow, and it's going to grow, and it's going to grow, and it's going to frigging grow. And eventually it will come to a point where these fibs for the first cycle will be quite irrelevant, in my opinion. The comfortable price range of $700-800 previous, kind of, except the first day candle, because if you look at this, initially Tau came out of the blocks on some exchanges going mad. But look, you can comfortably start moving out up to $2,000. And people will always be greedy. People will always say, oh, but DXB, I thought this is going to go to $5,000. It may well do crazy numbers that we can't really track on the fibs, or, you know what I mean? Like it's all about demand, supply and demand. At the moment, the major demand for this is coming from institutions, right? But if you had to sell, I would always go here. I would always go here. Could you, $1,000 to $1,500, very comfortable, in my opinion. I think this asset, look at the room to the upside. The 3618, the 2618, it should get to the 2618. And what is the 2618? Well, that's $2,000. But don't sell at $2,000. $1,900 is good. $1,500 is good, right? Like, you've got to stagger these sell orders so there's no human emotions involved. When it hits $1,000, maybe you take some profit over here, and then you do that, like literally. And then, of course, because it's a multi-cycle play, it's an asset that's not going to be. If Tau crashes down tomorrow, right, just as an example, I'm happy to hold it for the next, for the next bear market. I don't care. It is a valuable asset that grows over time, and that's how people make money in cryptocurrency in the long term. All this short-term trading shit, is good, but it ain't going to make you rich. It may give you 20K, 50K, 100K right now, but in a sustained period where you just buy cryptocurrency and you invest in the bear market and blah, 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 this is a comfortable level to be out this cycle. 1,500, 1,000, maybe you take 10, 20% there. And then you're like, okay, you know what, market, they've printed too much money. Maybe the 3618 is in play, right? At the 3618, maybe I would take a maximum one order, right? If it hits above, I don't know, on the chance that it wicks to 2.5 or 2 or whatever, maybe I'll put a small order here to sell, right? Guys, we've got to be kind of scientific about this. And then, of course, personally speaking, I'm not interested at the higher fibs, because if that smashes through my sell order between $2,000 and $2,500, I'm already winning. If the market crashes and we come down straight away, I don't care. I'm sitting there with like maybe, I don't know, 50 tau or whatever, or 20 tau or whatever it may be to go into the next bear market with. I don't care. My idea is to remove majority of my kind of like make my money here in this 2618. So this is the Avalon Labs AVL, very interesting project. We'll take a look. Where are you? What's it called? Avalon AVL? AVL. Avalon, $38 million market cap. Pretty resilient chart here. Let's have a look at the market cap fluctuation. It's actually it did the magical $100 million back in March 2025. Then, of course, the highest it went in market cap, 69 million here before the crash, and now stabilizing. So has actually gone through a large period of accumulation with this pump, and then the market unfortunately tanked it. Where can I buy this bad boy? Let's have a look at this. Guys, make sure you give a big shout out to any Jamaican friends you know. You understand what's going on over there. The biggest, largest, hurricane in the Caribbean right now is in Jamaica. So pray for Jamaica, guys. And big up your Jamaican friends. If you know anyone, just say, look, is everybody all right, mate? Is the family all right? You know, nice to be aware of what's going on in the actual world. This is looking good, bruv. I have to admit, it looks good. What is it? Real estate tokenization pre-sale. Avalon X is launching crypto pre-sale focused on. Okay, that's what it did. It's an RWA play, is it? Redefine the landscape of Bitcoin-backed finance. Creating an on-chain financial center for Bitcoin. Innovative solutions backed by. Okay, sorry, not an RWA. It's a. Where's your website? Bitcoins. So you basically got lending and DeFi on Bitcoin. Now, currently, are you competing with stacks, lending and borrowing? Now, this is pure form of DeFi. Interesting. Who's backing it though? You need to have major backers, my friends. Bitcoin money, because if it's backed by someone big with its current market cap, I think it's truly, then it will be truly undervalued, in my opinion. Because it has got a decent idea, RWA. Because don't forget, the Bitcoin whales, they like to spend their money, and this will give them an avenue to unlock that massive TVL of Bitcoin. Stable coins, Bitcoin, who's behind it? Who's behind you? Does not intend to target any US persons. Oh, you chicken. Mainland China, Hong Kong, you got to be super compliant. Why are you trying to rug people, Singapore residents or nationals or persons in that country, which is prohibited by a restricted person? We know the US has opened. Maybe they'll become legally compliant, but that is a red flag right there. All major jurisdictions. I understand China mainland, because that's a no-go area. US is just about to complete the complete all of the crypto regulation. So that was too soon, but November should be a good time to maybe revisit that. Singapore residents or nationals, I'm not sure about that. Singapore is pretty crypto friendly. And what else are we looking at here? Restricted persons. Okay, XYZ. Yeah, it looks okay, man. Looks okay. Decent. Wouldn't these AI and deepin projects be at risk of getting replaced by newer and possibly better projects between now and 2030? Excellent question. No is the answer, because you have first mover advantage, number one. Number two, it takes years to grow. We know, for example, the likes of Tau have been in development for many, many years. And it's never going to be as easy as, hey, the new kid on the block. Yes, there will be technology that complements AI and deepin. There will be bigger projects that come out in the future that are backed by, I don't know, who's who. Look at the example of Asta and Hyperliquid. You know, Hyperliquid came and innovated this space. CC thought, okay, you know what, I can get one over them, right? But is Asta better than Hyperliquid? Yeah, if you want to hide your order books and fuck around with people's money. But if you want to be transparent, nothing is better than Hyperliquid, right? Because you and I can see the order books. So I doubt anything comes along and says, okay, I'm going to go and dethrone Bitenza Tau because, yeah, all of a sudden I'm a competitor. Yes, there will be competitors, but you've already, by then, you've actually already had, like, it's almost like Bitcoin, right? You've already had the first mover advantage. You've already cemented your subnets. And these subnets, we call them subnets, but some of these are real companies. Like, for example, Next Place AI is a real company. I was looking into this in 2023. Next Place AI, look. I hope they sorted they've actually got a token now as well, which is weird, but I remember their website, Next Place AI, subnet 48. So yeah, you will get genuine companies that are attempting to come on the scene, but I don't think anything would be as good as what we have currently. So it's almost like Bitcoin and Ethereum. Could there be another Ethereum? Yeah, there is Solana, there's Sui, and all of these other layer ones competing to be in that space. But there is only one Ethereum. There's only one Bitcoin. There is only one Bitenza Tau, right? There isn't a second one. So I love the question. Another risk would be ultimately when the AI bubble, as and when it comes, because we're looking at that as the second version of the dot-com bubble, what does it do to projects in the decentralized space? And I think that's a legitimate question. What is going on, blockchain God? My brother, hope you're doing well. Hope the family is well. Absolute legend. Just because he's here, you should smash a like. Hope you're doing very well, brother. Industry report. Always look at industry reports just to see where things are. We know BNB's just had the massive Q3 hitting all its targets. That's insane. But we are sitting at a moment where we're pivoted. I don't think people like, if you're new in the space, you probably won't realize what this is. You know, but this is the start of the printer. The only damper that from today's report, the only negative thing was, right, and we have to remember, is the headlines. So the headlines is the reason why the market is not going 100%, 500% moves, right? Because what you're seeing here is Fed cuts key rate. Powell says December's move, not sure thing, right? So this is why the market's got handbrakes on. And of course, we've got to catch up with liquidity before we walk away with our millions. You don't become a millionaire overnight, guys, in crypto, unless you're incredibly lucky. But what we know, because we've survived and we're here tonight, and we are seeing the official, we are seeing the official pivot of the Fed. He's going to have to put the brakes on somehow. So the odds fell from 90% to 60%, right? So dollar index has, of course, it went to 99. That's also another reason why the market is not moving. It's rarely seen since May. This is where the scary stuff comes in. 10-year treasury yields have risen as well. So the overall, we may see, the part we're sticking to is the QE, but the real kind of Wall Street is saying they call it hawkish. It was kind of hawkish today. So this is what, this is what we're looking at. This is what we're looking at right now. And that's important because if you still have few things to buy, few adjustments to make in your portfolio, we could get the opportunity. But that is why the dollar index rising to a level not seen since May 2024. That's important. And of course, you've got to look at the 10-year over here, and you've got to see. This is what the market is saying right now. We have dropped to 60%, from 90%. So this is all going back to December's rate cuts. You got to take apart the headlines, guys. Screw the headlines and decipher them. If they want to send the markets down, this is how they're going to do it, right? So another thing that Wall Street is saying before they get allocated is they're telling retail that the Fed's call was very hawkish. And this is what he was concerned about, big company layoffs, lower inflation risks, and suggest that the Fed's bias is towards more cuts. And these are firmly in place. So they've ignored everything, and they told retail, concentrate on the fact that the CME rate cut odds have fallen from 90 to 60%. Bullshit. All right. That the dollar index is at 99, right? And the 10-year treasury yield is now at 4.5%. So if you are an investor right now and you're reading that article, all you're doing is looking at the negative headlines. What do we have here in the green? Well, Powell talked about, look at this. He talks about big company layoffs and lower inflation risk. The key word is lower. Keywords are lower inflation, right? And of course, suggests that the Fed's bias, dovish, is towards more rate cuts, and they are firmly, these are his words, in place. So what are we bearish about? What are we bearish about? We're bearish because we are in an industry in the hands of market makers. We are in an industry that's manipulated in one direction or another very quickly. But when the shackles come off, when the Fed says, look, we've been now, we've pivoted to QE, we've printed, 7 to 10 trillion or whatever they're going to print. My friends, we have to have a better belief than reacting to these headlines. And of course, overall, it's only natural. We may see more pain. S&P slipped, 2%, 0.2%, right? This is what the S&P is doing. Powell stressed that December's rate cuts was far from done deal. Okay, sure. Give the market a little bit more suspense, I suppose. His overall presentation still seemed pretty market friendly, consistent with lower rates. Powell spent more time talking about major employers freezing job creation or conducting layoffs. So what that tells you is their major worry is towards the labor market. His inflation take was also good news. And of course, he said it was, in his own words, much lower risk of persistent rise in inflation. It's very good. And he said that the inflation is close to the Fed's 2% target. In any other circumstances, October, the business cycle, earnings season, the last year 4 of Bitcoin cycle, with a dovish Fed and a pivot, you would be expecting 200 to 300% moves overnight, sometimes in an hour, in a traditional bull market. But that tells me something, guys. It tells me this market is running into 2026. And this is, of course, quite interesting as well, dodging questions about asset valuation. Of course, Fed looks to the financial system that can withstand shocks. Okay, banks are well capitalized, households are in good finance, blah, blah, blah. So it's interesting overall. I think it was very, very dovish. The backdrop was to those questions regarding the Amazon layoffs, right? So Amazon, obviously, this is huge, right? This is going to add to the markets. This is good for us. Labor market is breaking, thanks to Jeff Bezos announcing that the layoffs that frequently relate to AI. He said it's still uncertain what was causing that, but we know it's not ChatGPT, right? We know it's not ChatGPT. So yeah, overall, guys, it's been what? How long have we been on? 2 hours and 30 minutes. It's been an amazing stream. Do I still believe Carrot will do numbers? Changing Carrot to MAVIA. I think, yeah, get MAVIA. I've written off my Carrot bag. It is a, if it does something, it does. If not, then I don't know. I think it still may do well because of Arbitrum. But yeah, at least, kind of like condense the risk into one of them. And I think MAVIA is a great runner. DCB, love the new name, bro. Appreciate that. You have any favorite prediction market tokens? I'm currently investing on pre-day virtuals. Much love, brother. I haven't yet. No, bro. I haven't actually gone into that, to be honest. Rightly so. I've just got so many tokens. But yeah, I'll definitely check out the whole niche. Thank you, bro. I prefer DCB, man. Appreciate you. Michael Gerard in the building, my brother. Hope you're well. And the investor squad. Yeah, legend, my brother. Is that whose ex is that? Sorry. You either adopt or get erased. I love that, bro. I think that's a beautiful note and a beautiful way to finish a pivotal evening, if I say. So guys, God bless you all. Hope you have a wonderful rest of the week. Any of you guys, let me know in advance. If anybody wants to take part of the show, do let me know. And we will do another one. Yo, Caveman, where you been? My brother. I'm going to have to shoot because what is it? What time is it, man? It's pretty late here, bro. Just coming up to 1 o'clock. But yo, God bless you, bro. Are you mining USDT, brother? What an absolute legend. Listen, let's do a show together tomorrow. How about that, bro? Guys, God bless you all. Have a wonderful night. And yeah, I'll catch you on the next one. Caveman, I'll ping you, bro, yeah? Yeah, definitely tomorrow. I need to have you in over and start working with me on this live stream. Take care of yourself, sister. Much love to you and the family and to the rest of you. Stay safe out there. Have a wonderful, wonderful night wherever you are in this beautiful world, guys. Take care and peace.